Hey guys, welcome back to the channel. In today's video, I'm going to be providing a longer term market update for Ethereum. And specifically, I do want to focus on this move coming back and breaking back above both the 20 and the 21 weekly moving averages. So those are the red and green lines. And this is a very big structural shift on this weekly chart, mainly because basically in all of 2022, these two moving averages were very strong resistance. The price was below it, and each week the moving averages were averaging lower. So starting here in January, we had the break below the moving averages, and then it flipped right into resistance on this big retest in March and April. And then from there, we just continue to roll over, form lower lows, and you can see the moving averages followed that trend, really just coming down, averaging lower. And then we had another retest right here in August, same thing, another rejection, coming back down, and just continuing out that process to where the 20-week moving average reached a value of all the way around $1,340, which was the lowest that it was since back here in the bull run March of 2021, where you can see they were very firmly averaging up to the upside. So that did represent that the trend and the momentum was firmly to the downside. But ever since then, we have actually seen the structure start to change, and we're seeing that shift where Ethereum has broken back above these moving averages right here in the beginning of January, and now we're starting to consolidate. And this is a very bullish sign because we're consolidating these gains. We're not giving back any of the progress that we have made over the last few months. And more importantly, we flipped these moving averages into support. And you can see this weekly candle came all the way down, retesting the 21 weekly moving average, and then bounced off of it as support. So that's overall a very bullish sign. And in general, this does identify and really give you the idea that we're no longer in this very bearish dominant downtrend. We're no longer in this same decline that we were in for the majority of 2022, where we had the moving averages averaging lower as resistance. Now we have them averaging higher as support. And again, you can see that slope has now turned positive. These moving averages have started to make their way back up. And the 20-week moving average, as an example, is increasing pretty quickly here. If I were to extend this out, you could see how quickly at its current pace it could be, say, in the middle of 2023. And that really does make a big difference when we're talking about this as support. Now, obviously, the 20-week moving average is going to depend how the next few weeks play out. But of course, at its current slope, if we were to have this continue to play out, then we could have that as support upwards in the $1,600 range, as opposed to where it is now at the $1,400 range. So it's really just taking into perspective how quickly these can average up, how they can be acted as support in a bull run, and what that means to the upside if we can continue to have these moving up and working in our favor. Now, of course, the bearish scenario is if we start to break back below them. And that doesn't happen until we have a close under $1,419 on the weekly candle. So we have a fair ways to go before that is even a concern. But I did want to throw this out there because it is a possibility. And with this, if the price were to come back below it, what I would look for in that scenario is just for the price not to flip it back into resistance. So for example, if the weekly chart is starting to look a lot less constructive and we do start to retrace this big upwards leg and we start to have closes in the $1,200, $1,300 range, just look to see if we can eventually reclaim it, because a very similar thing actually happened back here in the previous bull market where, you can see how we had the big break back above it in April of 2019. The moving averages started to slope back upwards as opposed to being resistance in the bear market, and we had a very nice leg. But when we came back down to retest, it was not support and we actually broke back below it. But when I zoom out here all the way, you can see it really wasn't that much of a concern, because what happened was the price generally just started to oscillate above and below it, not as support, not as resistance. And that really just signified that we were in this sideways consolidation period, even a range of accumulation. You could make the argument that this was just one massive zone of longer term accumulation before that eventual bull run, when we did flip that range high back into support. So what that translates into today, if we were to lose the moving average, then you could still make that general argument that we are just accumulating here. So for example, if it were to repeat what the previous market cycle did, then if we were to lose the moving averages, we could just look to that move just kind of oscillating above and below. So for when eventually Ethereum is able to break back above it, that's when it would really start to have, that same similarity, that same look, where we'd have the price above, below, not as support, not as resistance, until we are eventually ready to have that expansive move to the upside. So those are just a few possible scenarios, but the most bullish scenario is obviously if we can hold it as support in the short term. I hope you guys did enjoy the content and the analysis. By the way, make sure to check out my Twitter page. I will leave a link to that in the description below. As always, hope you guys enjoyed, and I will see you in the next one.